Aloha, everybody. Welcome to Relax with Rise. We will wait for a few more people to hop on, but we're excited. This is our first time.
Very first
This
time.
is our first time. Aloha. Well, depends on where you're at. Aloha ahi ahi or aloha kakahiaka. Depending on where you're at.
Well, we're excited to just do this kind of more relaxed environment and versus doing a webinar. We really wanted to bring people in to kind of get to know us. And then also, if you did have any questions, type it in the chat and we can go ahead and answer them. But really, our goal here is to let everybody feel comfortable, be a more relaxed setting. This is going to be about a half an hour live to just give you guys some updates, but then also kind of talk story with you guys. We want to know, what it is that you guys want to know, or if you guys have any concerns or anything we can answer.
Elaborate on talk story for those of us that are joining that are not from Hawaii.
So talk story is just mainly, when you're out with your friends or you're with your family and you guys are at an event, you just, shoot the for a lack of better words, to shoot the shirt.
We gotta keep it. We're relaxing, but we also gotta keep it PG.
Well, yes, that definitely as well. So how have you guys been? Maybe just update us on what you guys have done so far this week. I mean, it's already Thursday. It's already October. It's like the fourth quarter of the year. I know that's huge for a lot of investors as well, because that's when people start to kind of, relax. They go on vacations with their family. They kind of, slow down. But for us, that's kind of when we pick things up, right? And you're gearing up for Q1 of next year. We're trying to wrap up things for the end of this year. So maybe you guys can talk about too, what is one big year-end goal that you guys are trying to achieve?
Yeah, what is one?
What is one, the main one?
It's hard to narrow it down to
one for each business.
Yeah, we probably have one for each business. No, but I mean that's definitely, I think it's definitely a good point. I mean, it's always good to have goals, and the more audacious, right, those BHAGs that you can have out there, probably the more beneficial, as long as you take action steps towards it. But I mean, we kind of have our hands in some different things. Almost all of it's targeted around real estate, except for one nonprofit venture that we're in its infancy stage of doing. But for us, I mean, because you brought up a good point, you're at the end of the year, so now is like a huge time to really start looking at making sure you have all your tax strategies in place, and you normally are going to want to meet with your CPA, right, just to make sure that you're taking advantage of every single opportunity that's out there. What happened?
I said stop hitting the table. You're making the camera shake.
The other goal is to get rid of my ADD. I don't know if that's ever going to happen.
Every time you do
that's a huge thing. That's a huge thing for me too, and a lot of people right now are worried about their taxes, right? Like preparing. I know even for me, I extended mine for a few more weeks, so from 2022. So my big goal by the end of this year is get that wrapped up, but then also see where I'm at actually for this year and what else I need to do to mitigate the taxes I'm going to have to pay. What else can I do in the next couple months that will help me save more or keep more of my money?
Yeah, I think that's a important focus. Like when you're talking about like normally the end of a fiscal year. Most people's fiscal year is like the calendar year. So closer to that end of that fiscal year, it's really important to kind of make sure you have all your ducks in a row there. But you also brought up a good point as far as 2024 is kind of looking, but also kind of looking to see, especially if you're in the investment realm, you want to be able to analyze maybe not analyze, but at least have like a global understanding of what's going on in the economy and be able to position your whatever capital you have. If you're actively investing, whether it be the equity market or real estate, like try to get your finger on the pulse of like, okay, what's going on? What can I anticipate for the next quarter, the next 2 quarters, or even the next year, and then try to strategically put your capital to work there. I think for another goal for us is just get into an equity deal. I mean, full transparency, we've done a ton of deals. Most of our deals have been debt deals in this last year. In fact, I just had another one, like literally 15 minutes pop up on my request side right before we jumped on this call. So it's like right now there's like 5 debt deals in the queue that we have to go through. So there's a ton of opportunity on the debt side, just making sure you leverage yourself okay. On the equity side, we just haven't been seeing the types of returns, and that could be good. It just depends on you kind of understanding, again, like I said, trying to forecast what's going to happen in the next 6 months, 12 months. And it's hard because there's spectrums that believe one thing and spectrums that believe another thing. So you got to try to have your best educational guess out there and kind of go with that. But lock in an equity deal in 2023 and continue with our debt deals. It's probably our I would say our two goals, especially for rice, especially when it comes to just specifically rice.
Yeah, I think we're all on the same page. And Emma had just done a post the other day just about the partnerships and really, getting to know the people that you are investing in. And that's the whole purpose of us, wanting to connect with people, wanting to do these lives and the webinars is really so, one, we can start to educate people on the benefits, but 2, so that you can get to know us as a team, because we all bring a lot of different strengths to the table, but we also have fun with it. And so I feel like, if you want to go, what is it? If you want to go faster, don't go alone or something. I'm not really good with the. If you want to go far, I forget it. But anyway.
No, that's when you have a team. If you want to go fast, do it alone. If you want to go further, do it with a group. A group that you know and trust.
Further. We're going fast and further. So.
There you go. I love it. Yeah.
Doing all of it.
That's why we have BHAGs. Okay, so let me reverse the script and ask you the same question. What are your goals to close out 2023? And what is your outlook for 2024? Or
so
goals?
To close out 2023 would definitely be to raise $5 million for the fund. Big, hairy, audacious goals, and also to be able to take off 2 weeks with my family, go and do something special for Christmas and New Year's. That time is when a lot of people slow down, but for me, it's kind of crazy. I don't know if you guys ever experienced this, but whenever I go on vacation, that's when a lot of things happen, and mostly good things, right? Last year when we went on vacation for the last 2 weeks of the year, I was told by my CPA, hey, you got to buy a few more investment properties or else you'll have to pay all these taxes. And so I ended up closing on a 5-unit and then another property here on Maui in the last couple of days of December while I was on vacation in Oregon. In the snow.
I remember that.
Yes. It's true. So definitely, just taking that time. And I think just taking a step back and looking over, okay, where am I going? What are we doing? For me, I am trying to get out of, fixing and flipping so much. I'm moving more towards new construction, new builds, as far as the single family space. But I want to concentrate more on the longer term opportunities with the fund, and then also, be able to enjoy myself a little bit more. And I think you and Harmony have been a great example of that. Emma as well, being able to travel, even though traveling on a budget isn't always, massages and staying at five-star resorts. I think it's more about creating those memories, creating those moments with your family. And I think we want more of that, especially now that my daughter is a senior. She'll be graduating, and who knows where life is going to lead her.
Just FYI, Utah has absolutely beautiful winter weather. You guys are always more than welcome.
I know, it is fun. I'm looking forward to a lot of potential investment opportunities in the future as well, especially if it's closer in Utah, because you guys are there. And I mean, I've stayed at your house before and it's beautiful. The snow is beautiful and just the scenery. And we just got a bunch of emails about the best ever conference. So yes. I'm excited, and that's not till April, but I'm still excited for that event. If any of you guys are thinking about going, I definitely would.
Yeah, absolutely. I'll definitely
check it out. Let's get your take on, because I know, maybe give a little of your background for those who don't know you, and then we can step into kind of what you're seeing right now in today's market.
I'll let Harmony give her background real quick, and then I'll jump in and give mine.
My background? You did very well.
Your background? I didn't give you a background.
Oh, sorry. The background of the
market. You. No, you. Yeah. Your background.
So previously I did casework with the military family programs, where I was for over 13 years, and I managed the last 7 of my time there. I loved what I did. It was feel like work. And then prior to that, I was in the medical field for 10 years. So I've always worked. He's always given me the freedom to go to school, go to work, do whatever I want. But I couldn't stay home. I got bored. No, I was one of those wives who just concentrated on kids and everything else that we had at home, because he was off island a lot. And I didn't really concentrate on the real estate side or on our finances. And all of that was very new to me. It sounds pretty spoiled, but it wasn't a spoiled. Like, we really had to work hard for where we started. And then to come into this real estate investing and not understand the entire process of how to buy a house. And I never wanted to at first, until we got here and we started doing this. And so learning that whole process has been so eye-opening, and it opened up so many doors for me personally, and understanding that even though I loved what I did for work with the military, I can still do it and help those that I love working with, but helping them leverage themselves. And, people work hard for their money, and finding ways to have their money work hard for them. So that has been rewarding for me, and just going into real estate in general has been fun. So when I can find ways to have fun and do what I want to do with the people I want to do it with, it makes it even better. So I'm definitely that wife who didn't want to learn that whole process or understand it. So now I budget, and now I know how to buy a house in so many different ways. And more than just that. So having fun with it.
Yeah. I can go back and relate to what you were talking about too, Zasha, with the holidays. Because I worked in a field where you never took the holidays off. It was always the busiest time of the year. So we're originally from Hawaii, and we moved to Utah, and everyone always asks, why in the world would you move to Utah? Well, everyone, not in Hawaii, they understand, but everybody in Utah always asks, why in the world did you move here from Hawaii? Everyone wants to go to Hawaii, especially to retire, but we moved here just to be closer to our kids. But when I was in Hawaii, I had a very long, and I would say somewhat illustrious career in retail. So again, I did that for 27 years, and 27 years of my adult life, we would never be able to take off Thanksgiving, Christmas, New Year's, because it's normally the busiest time of the year. So that's when you normally double down and you're doing more work. Mm-hmm. But so I was the CEO of one of the larger grocery retail chains there in Hawaii. And like I said, I did that for like 27 years. And again, life kind of catches up to you. You start having grandkids. Kids get older, they move out, they start to have grandkids, and then you start to realize, wait, like you're working really hard, moving up that corporate ladder, and there's no right or wrong way to do it. But you also you step back. There's times in life where you step back and get what is really important to us and our lives, and family is normally going to be on the top of the list for everybody. Normally, not always, but I would say most people, it's at the top of the list. So we wanted to relocate, be closer to our family, our kids and our grandkids, because they moved away. They college, military, and they like, Mom, this is just too expensive back in Hawaii. If I move back, I have to move back in with you. And we're like, no, we don't want you guys to move in with us. We want you guys to be by us, not in the same house as us. So we've been doing the whole real estate thing. We bought and sold houses. We actually did quite a bit of transactions in this last year, the year before. But again, more so on the debt side. So we started doing lending on debt deals, and we've done, I think to date we've done in the last 2 years, 60 or 70 transactions, somewhere in that vicinity. It's been quite a crazy ride. It's been actually fun as well, eye-opening. You learn a lot, and you get to create relationships that will last past just any type of cyclicality that we would see. But kind of navigating to that, so what we see in the market, I mean, it's definitely, especially in the last few weeks, it's definitely changing. It's hard to really see what's going to happen. Whether if you guys listen to any kind of financial news, I'm sure you hear recession, hard landing, soft landing, and pretty much everything in between that. You really have to, again, look at it from a global standpoint. The bond yields just skyrocketed in the last week. It did come back in the last few days. It tapered back in the last few days, but it's at the highest rate since, I want to say, August of 2007, which if that's an indicator, I mean, that might tell you something as well, right? Everyone knows what happened in the 2007, 2008 timeframe. So the 10-year risk-free treasury is right back up to where it was back in 2007. And there's a direct correlation between that real estate, commercial real estate, as well as mortgage-backed securities. So I think the Feds are signaling, well, I don't know. They're honestly signaling both. They're signaling at least one more rate hike, but they're also signaling to slow down the rate hikes. So it's kind of hard to really know what's going to happen. If I had to guess, my gut tells me they're going to raise rates at least one more time. I think for the most part, the markets are built in for at least one more 25 basis point raise. And then they're going to hold it. And then hopefully we see more inflationary pressures come downward. That's the hope. And we'll start to see some kind of reprieve probably towards the end of 2024, 2025, with maybe drops in interest rates. And again, this is going to impact everybody from a global standpoint because just credit got significantly more expensive. Whether it's your credit card, short-term credit, long-term credit, mortgages, they all got significantly more expensive. So what does that kind of mean? It just means that we're probably down towards the end of the cycle, and you never want to try and time the trough, never. But we're probably getting closer to that end period. We're starting to see inflation come down. There are some signals, like the yield curve has been inverted for, I don't know, at least the last 18 months, I think. Yeah, I'd have to go back and look, but I think it's been at least the last 18 months. The inverted yield curve is like a telltale signal of inflation. It hasn't come to fruition yet. It just, again, the federal government has dumped a ton of capital, right, with COVID into the economy. And I think there's still some of that lag coming to fruition. But what does that mean? It just means that there probably will be more opportunities on the buying spectrum of things. If you're looking on that side of it, you just have to be cautious. You just have to know and understand what you're putting your money into. And as Sasha said earlier, if you're going to trust someone else to do the investing for you, again, whether it be in the equities market or real estate, some alternative asset class, be sure that you really know and you trust those, and they are doing their due diligence to make sure that it's a good asset, because deals do go south. And there's times where you hear about it in the market where there's foreclosures going on, so more and more foreclosures starting to go on, which again, on the buying side, it brings up
it
like a
opens
lot of
opportunities.
Yeah.
Mm-hmm.
It just depends on what spectrum, what side of the coin you're on. Obviously, if you're on the selling side, that's not a good thing. But if you're on the acquisition side, then yeah, there's a lot of opportunity. And just kind of understand, I would say, try to keep your finger on the pulse with what's going on with the economy. Make your own informed decisions on what you think will happen. We do see, and this is market specific, but we are definitely see prices dropping and reduction in home values as well as commercial real estate values. Cap rates are starting to expand, and this is what we're seeing. Again, not every single market, but normal. I mean, if you look at it from a national standpoint, that's exactly what we're seeing.
Yeah, I think those predictions are pretty spot on. And even from me and even other people that are in the single family realm, you know, they're also seeing similar effects. And there's definitely a slowdown, I feel, in almost every market because the interest rates are so high. And so it's making it, you know, unless you can get creative with certain.
That's when the creative doors open. Yeah.
So what, maybe Harmony too, you could touch on kind of what are some creative strategies that you're seeing now in the market, and people are, you know, unable to make deals work because of the interest rate. So what have you seen that buyers are?
So as a buyer, you can go in and negotiate with number one for us and those who we align ourselves with, we want to find a win-win for everybody in the situation, selling and buying. And you want to make it as fair across the board as possible so that the sellers don't feel like they're getting gypped when they walk away from something they maybe don't want to and feeling forced to. So that's huge for us. And being able to walk into a deal and maybe they have a lower rate. So you're going to, you know, buy it with their rate in place, having the seller financing. You're going to do sub to, then offering them a down payment so they're not losing on their equity. You can pretty much make any deal work as long as you can find that right seller that you can align with and find their terms. That's what's fun about real estate is you really don't have too many boundaries as long as you're doing it the right way.
Yeah, ethics plays a large portion in it. I mean, again, there's people that are not doing it ethically. You got to protect yourself. And I kind of understand. I think I can't remember who said it. One of our members said it. Our team member said it. Just try to educate yourself as much as possible, especially before. And I think there's more of that going on today. I just got a call from. So real quick, we're very active in the local RIAs, which is a Real Estate Investors Association here. Multiple. I'm actually the president of one of them. And I got a call from another president of another RIA here, and he had a call from 3 separate individuals that lost 6 figures, partnering up with people that they didn't fully understand. So that's like super critical. Like, never dump money into something you don't fully understand, or you don't have like 100% trust in the people that, and you got to like do your due diligence and over verify the people that you're going to put your money with, because you definitely don't want to be in that bucket where you're just dumping money, not necessarily understanding the investments that you're in. How is the property collateralized? What happens? Like, you just start going through all the different scenarios. Like, okay, what happens if the market dips 20%? What happens if occupancy goes down to 70%? Like, just go through all of these different worst case scenarios and then ask the question, like, whoever you're partnering up with. You can, honestly, with technology nowadays, go in ChatGPT, says, what are the top 10 things I got to look out for in an investment, and ask those questions. Like, super easy. But try to educate yourself on it. And if you guys don't know what ChatGPT is, please go look it up.
It's also protecting yourself.
Yeah.
You can go into a deal with someone with the best intentions, and they just maybe don't understand how to properly protect, themselves and each other. So looking at that as well, because that can be huge for a lot of people. And then looking at the multiple exit strategies too.
Right. And every investment is a risk, but there is also upside, right? So I think Chris had mentioned this on one of our meetings, is that, as long as like things average out, you may win some, you may lose some, but at the end of the day, you just have to make sure you're more up than down. But I don't think that ever that ever stopped us from investing in real estate. And then now that we're realizing the potential to be more passive in it. I mean, we're running a fund, so we're very active. But if I knew this, like, even existed where you could invest in these big apartment buildings, get the equity, get the cash flow, but I could still work my job and just kind of have it working for me. I honestly wish I knew that while I was working as an engineer.
Yeah, us as
Too.
well.
I think the bigger one for me was it was intimidating. Going into real estate, I feel like, I started off with getting my real estate license and then working our way into doing, lending and everything. And then when it came to the commercial side, I felt like that was the college version of school, like jumping and skipping all of the other grades, going straight into it. And it's not as scary as it sounds. It's not as intimidating. It actually is pretty similar, just on a bigger platter as far as, underwriting it and everything, because that's what he does, since I'm not that's not my cup of tea, but understanding the process of it as well. So,
well, and then you guys were heavily involved in a lot of debt deals. So basically lending out your money to other, fix and flippers or people that were doing a lot of the active side on the smaller projects. And I started doing that as well. And so once we implemented that into our fund, I was like, oh, perfect. Because I'm already doing that on my own. But of course, for me, I don't think that I had been protecting myself as much as I should. And just learning from, Chris and all the, things that he had in place, I never even thought about that. And then even recently, with all the fires on Maui and things burnt, like houses could actually burn down or floods happen and these natural disasters. So, I think it's very important to work with someone who already went through it, but then also has the proper, like you mentioned, Harmony, the coverage or things in place that will, in case anything happens, be able to protect you as much as they can.
Yeah, that's huge.
I think too, just taking a step back, and I think that's why we set up the fund the way. Not I think that's why we set up the fund the way we did. We wanted it to be more diverse for people. Again, going back to that win some, lose some. I mean, you want to win them all, but should something start to go awry, you're going to have you. And we try to be agnostic with the assets that we look at, as well as a proration between debt and equity. And again, your debt is on the debt side. For those of you that are not fully aware of what we're talking about, you're loaning for the particular property, and you're normally gonna, well, if you structure it legally and correctly, you're gonna have all of what she said. You're gonna check, make sure is it in a flood zone? If it is, how is the earthquake, the topography? You're gonna look at all of that fun stuff. You're gonna look at is it in a historical zone? Is there gonna be issues with getting permits? Like, you're gonna have to look at all of that. There's a lot of kind of back of the ground, background work that goes into it, just to make sure, again, like I said, ask the 10 questions and figure out what are my different exit strategies for all of them. But just knowing that I'm putting a loan on it and I'm securing that capital against the physical property. So if anything happens, you can typically, there's other things you can do. I don't want to go through a foreclosure, but you do have that option. You can do something like a deed in lieu or go through a foreclosure, and then you have strategies to be able to get your capital back should something happen with that borrower or even with the property too. So there's you're trying to, and then the way we structure it is we're always trying to make sure that we have, again, barring any large economic downturn, we always try to make sure we have enough equity in the deal that should something happen on the borrower side, we have enough equity gap within the current value of the property and what our loan amount is, so that we're always somewhat protected there. And on the debt side, you're going to be on the lower spectrum of the risk. On the equity side, like Zasha said, there's a lot more upside potential. The debt side, it's fixed. It's a fixed rate. On the equity side, you have a lot more upside potential, but you're also taking on
a bigger risk.
More risk.
It's definitely a bigger risk.
Well, and I like the debt side too, because you kind of know what you're going to get at the end of the day.
Yeah.
And especially if it's a deal and you do need to foreclose on the property and there's already enough equity in the deal to begin with, then of course nobody wants to go and take over another person's property, but at least that's your like safeguard, right? Is that equity in the deal.
Yeah. And you have all the in-betweens as well that you want to look at as before. And those do come and flow a lot more often than an equity deal. You're going to see a lot of debt deals. I mean, within a week, we can see, 5 to 15 to 0 the following week to another 20 the next week. So you see them pretty often, and to know that you're going to have your funds there growing for you, which we do have one right now. So if there's any accredited investors, we are actively raising for a debt deal. So definitely reach out to us. That will be 10% APY to 6-month term. So let us know, mark it in the DM there, or message us. We do have one for our accredited investors right now, but we always have those. Those ones are easier to come by for sure. And they do feel a lot safer. But the equity ones are very fun because you can let it sit and grow for you for a little bit.
Right. Well, and I like the debt ones, and we are definitely, I think, in this environment too, a little bit more cautious on the deals that we do get. So they're not always available, but we do have one right now that we're invested in as well. So if you guys do have more questions about that, we can let you guys know. But we're coming on the 30-minute mark. So thank you guys for joining us on this quick Relax with Rise LinkedIn Live.
You gotta have alcohol next time.
We'll
We have
do
to
it
schedule it
in the
later,
day.
and we need alcohol.
Later in the day. I still am finishing up my coffee here. So
Later for her.
right, yeah. Not 10 a.m. Not 10 a.m. Maybe on a Saturday. But getting back to last week. So this is more relaxed environment. Typically we'll have webinars every other week. And last week we had our fund members, Lais and Raquel, who talked about working their full-time jobs while still investing a little bit more passively. And so if you want to go and take a look at that, it's on our YouTube channel. We'll also link it in here after this recording gets posted. And then next week, we are talking about taxes. Like we were talking about in the beginning, our goals in the next few weeks, my goal anyway, is to turn in my taxes because we got the extension, but then also plan for the next couple months what else we have to do to mitigate 2023 taxes. So if you are in the same boat, that is going to be happening next week, Thursday. Hop on, ask the tax professional any kind of questions that you may have, and he'll be there to answer it. He does these, he works with investors as well. So he kind of knows what we are looking for, and he's going to give you more in-depth strategies that you may not have thought of yet.
Awesome. Well, thanks for having us on.
Thank you.
It was fun.
It was relaxing.
Yep. Was it relaxing? I was relaxed. I was fine.
Thank you, Mary Lou. Thank you, Kenton, Michael. Mary Lou, I just met her was it last month? We went to meet up with Andrew on Oahu.
Oh, yeah.
Yeah, Rosenberg.
Oh, that's right.
So,
Yes.
yeah. So she is a very active investor as well. Emma's one of our other fund partners. So if you guys, like I mentioned, stay tuned for that tax webinar. I think we're putting out the event on LinkedIn as well for you to join and go register. But we would love to have you and love to help you in any way. Feel free to reach out.
Bring your questions.
Absolutely. Thank you, guys.
Thank you.
Thank you.